Engulfing candles can be bullish or bearish in nature and are reversal patterns that you should look out for. These candlestick patterns show us that sellers are overwhelming buyers in the market for a bearish reversal and vice versa for a bullish reversal. To identify an engulfing pattern, second candle has a body much larger than engulfs the first candle. Second candle is the opposite type when compared to the first candle. The bullish engulfing pattern is a bullish reversal pattern that's typically found at the bottom of a downtrend, thereby signaling a price movement upwards. In this pattern, the first candlestick would be a bearish candle, which is then immediately followed by a larger bullish candle. This indicates that the buyers greatly outnumbered the sellers and regained control of the market from them. The bearish engulfing pattern is a bearish reversal pattern that's typically found at the top of an uptrend, thereby signaling a price movement downwards instead. In this pattern, the first candlestick would be a bullish candle, which is then immediately followed by a larger bearish candle. This indicates that the sellers greatly outnumbered the buyers and regained control of the market from them. Let's have a look at a bearish engulfing setup this time around. As you can see from the chart, the price in the market had been enjoying a steady uptrend in the past few days. However, we can see that a bearish engulfing pattern appeared near the top of this uptrend. Clearly, the second bearish candle is engulfing the previous bullish one. From here, where can you expect the price to be headed? If you guessed downwards, you'd be right. The price took a fall as expected after the bearish engulfing setup, which is a bearish reversal pattern to look out for. In this case, the price fell from 1.19341 to 1.16307 for a total of 303 pips. If this helped you understand better the topic, make sure to like, subscribe and hit the notification bell so you don't miss the next video on tweezers, a double candlestick setup.